We had a few questions about what this means for the average banking customer. So I did sit down with Manny Garcia, a Wells Fargo financial advisor. A lot of people have been getting notices from their own banks acknowledging the situation that happened with Silicon Valley Bank. So what does this mean for the average person who has their money in a small, mid-sized, or even larger bank?
What this means is banks are trying to get ahead of the clients, letting them know what they have and what their assets have. I know for a fact that when we sent out ours this morning, we assured clients that our FDIC registration, what their limit is, we're above that limit on just deposit holdings, liquidity holdings. So we're trying to put all our clients at ease, and I think that's what most banks are trying to do right now.
Should people be concerned? And I don't know if concern is the right word, but how aware of the situation should they be, and how closely should they be watching it?
They should be concerned with how their banks are managing their assets. If they have a bank that's not as diversified as other banks, I should say. That being said, they should just be concerned about that. They should be concerned about their FDIC limits to make sure they're correct, so that way they're covered. By the way, I do want to ensure that the FDIC did come out and state that they're going to cover all the depositors 100%. So the depositors in these two banks are going to be fully covered and made whole.
But the investors, that's a different situation.
The investors is a different situation. Stockholders or debt holders, that's going to be different. That's going to be held separately. But the depositors will be covered.
For some people, this brings up memories of the banking crisis and the Great Recession of 2008. I mean, could we see this happen again?
Hopefully nothing's as bad as 2008. And I wish I had a crystal ball to tell you like exactly what's going to happen. I'll say this, the Fed is going to meet this Wednesday, coming up Wednesday. They are going to raise short-term interest rates.
So you think that they're still going to raise interest rates on Wednesday?
I still think so, but we don't know the amount, right? It could be 50 basis points, it could be 25. What we do know is the Fed is trying to cause a deflationary event, which is obviously trying to just bring down inflation because it's running a little high right now. Prices at the grocery store has been high, rent's been high, prices of housing's been really high comparative to what the income levels are, right? So they're trying to bring that down. What that means is we have an outlook that there is going to be a recession at the mid to late 2023. That's Wells Fargo's outlook. So that's going to be something to look out for, definitely. And this could be a precipice to that.
What about people who are closer to retirement age or just normal investors? Should they be doing anything differently?
People closer to retirement should take a look at their portfolio. If they have a financial advisor, they should meet with them for two reasons. Just to make sure that they're not taking as much risk or overexposed to a certain market or a certain sector, and to make sure that their plan is on track to meet their retirement goals. The economy is slowing. Liquidity in the market is tightening up. We do see the interest rates rising in the next upcoming days as well. So Wells Fargo still continues to favor a defensive approach to investing. What does that mean? Just having a defensive portfolio for when tough times do happen and will happen.